Hey, Central Virginia, the Federal Reserve Bank has now admitted that they've caused a huge problem in the housing market, and it's not exactly what you think. We'll cover that today on your July 2023 Housing Market Update. What is going on, party people? In today's market update, we are going to cover for you the problem that we are experiencing that the Federal Reserve has caused in the housing market, raising the interest rates or raising the rates at which they lend money to banks, and it's probably not what you think. Be sure to stick around and we'll break that down. All right, so the big problem that we're experiencing in both the national and our local housing market is a continued lack of inventory. As you can see in the graphic, on a national scale, new listings coming to the market is down drastically compared to what we've seen in the last 6 years, and we're actually down 25.7% year over year from where we were at this time last year. Interesting enough, we are also down 16.4% from where we were at this time in 2020. And if you don't remember, we had this little bug thing that was going around, this pandemic thing, where no one wanted to leave their house, nobody wanted to invite anybody else into their house, and inventory was way down at the beginning of the year. We are still 16.4% down from where we were at that time in 2020. And the numbers are even worse in Central Virginia. We're down roughly 30% on new listings year over year. And as you can see in the graphic, so this is new listings over the last 5 years. We're at the lowest point that we've ever been in a June month in the last 5 years. So this problem is stemming from two places. First is resale homes, and this is where the Fed comes into blame. The Federal Reserve President of Richmond has admitted that by rising the rates, they did not anticipate how much that would stifle inventory. And what that means is we've got a lot of homeowners out there now that have locked in very cheap long-term debt at sub 3% or hovering around that 3% rate. And there's a lot of homeowners right now that are just simply reluctant, that want to move, that need to move, downsize, upsize, side size, and they're simply reluctant to do it because they don't want to sell off and walk away from, let's say, a 3% interest rate and walk into what's now 7.25% interest rate. The other problem that's contributing to the lack of inventory that we're experiencing all across the market is a simple lack of new construction starts or new homes being built. Now, if you look at this graphic, this shows new construction starts over the last 23 years, so back all the way to 2000. And we also have, so it's a kind of a complicated graphic, but the blue shows the new construction starts over the last 20 years. We also have a line showing the averages of new construction starts between 1960 and 1999. We've got a line showing the averages of starts between 2000 and 2007. And then last but not least, we have a line showing the averages from 2008 to 2014. Now, as you'll see, there was a huge surge of new construction from 2000 to 2007, which was a contributing factor to the 2008 recession, amongst other things, shady loans being given out. There was an oversupply of homes because builders were simply building more homes than the market could absorb. That said, after the 2008 crash, we experienced an exodus in the housing building industry where a lot of the tradespeople that were building these homes and there was no work to be had, so they moved on to other venues, be it commercial construction, residential handyman services, or just simply got out into different industries. And we have been experiencing since 2008 a dramatic decline in new construction simply because there haven't been enough people to go out there and swing hammers and drive nails. So as you can see, from 2008 to 2004, we dramatically underbuilt the amount of homes that we've built historically, between 1960 and 1999. So the good news is here, the silver lining, we are just now getting back to those 50-year averages of what we've historically built. But, if you go, let's call it, what's that math there, 6 years, building about half of the 50-year average amount of homes, you're going to have a deficit, and we simply cannot build enough new homes fast enough to make up that deficit that we experienced up until roughly 2014. Now, you might be sitting there saying, hey, Chris, I hear you that supply is down, but demand has to be down given the interest rates now, 7.25%. And I would agree with you that yes, demand is down, but it's not quite down as much as you might think, and certainly not down enough to change the dynamics that we see between buying and selling, and the fact that we're still in an extreme seller's market. So just to go over some stats with you, pulled directly from our Central Virginia multiple listing service, Month supply of inventory, essentially the absorption rate or how long it's taking to sell out current inventory given the rate at which homes are selling. We are still under 1 month supply of inventory. Friendly reminder, anything under 6 months supply of inventory is considered a seller's market, so we're still very much in an extreme seller's market. The median days on market is still 6 days, so that means on median, homeowners are getting, or home sellers are getting their homes under contract within 6 days. In the month of June, on average, sellers got 103.5% of their asking prices. So that means on median, sellers in Central Virginia in the month of June 2023 got 3.5% over their asking price for their homes. So as you can see from the numbers, while transactions might be down, we're still very much in a red hot seller's market. And as you can imagine, we're still seeing prices continue to climb. So in summary, even though rates have risen and maybe supply is down, demand is down a little bit, the dynamics between buyers and sellers have relatively remained the same from what we saw during the pandemic. So what does this all mean for you? So for my sellers, don't believe the headlines. If you turn on the news, you would believe that the market is crashing, that prices have come down, that the doomsday is here. Now, I will admit that outside of Central Virginia, there are a lot of markets throughout the country right now that have seen price depreciation, right? We're one of the few markets that have never seen that price depreciation, and our homes have continued to appreciate and prices have continued going up. So we're very fortunate in that aspect. Realize also that an interesting trend that we've seen is that seasonality has returned. So in our market, we see the large chunk of homes sell during the selling season, which is historically from about February, March to about August. And once the kids go back in school, we see a small decline, and then it kind of tapers down for the remainder of the year. We saw those dynamics went away during the unicorn years of the pandemic, 2020, 21, and really 22. But we've seen those dynamics come back in 23, and I think we're going to settle back into that normal seasonal cycle. So realize that if you're watching this and you're thinking about putting your home on the market, you've got until about mid-August to be in that sweet spot. Not that you can't sell your home in September, October, November, December, but just realize if you're really trying to time things, we've got to get your home on the market by mid-August before the kids go back in school around the 20th of August. And then last but not least, we already hit on it, summer ends in the middle of August. Once those kids go back in school, most buyers, I would say the large majority of buyers are going to be seasonal around the school schedule, and we see it every year. Once the kids go back in school, the market tends to slow down a little bit. So once again, if you are thinking about selling, now is the time. For my buyers, Armageddon is not here. I hate to break it to you. We talk to a lot of buyers that they want to buy a home, but they're waiting for the market to crash, or they come into it with the wrong expectations that they're going to be able to negotiate these huge discounts. And guys, the reality is simply we're not seeing it in our market. So if that's somebody that's you, I wouldn't hold my breath. I don't think we're going to be seeing a crash anytime soon. Next, some good news is we didn't cover it in this market update, but rates are projected to drop by the end of the year. There's a lot of factors in that, and that's a whole nother video for another day. But just realize there's a lot of factors that point to the fact that rates should be coming down by the end of the year. There's a lot of smart people that agree that they will. So realize that you can go buy a home right now, rent the rate, go ahead, just get the house under contract, and then provided that rates go down at some point in the future, you can always refinance and get yourself into a lower mortgage rate. And then last but not least, realize that renting is your alternative. So we have this conversation every day with buyers who just say, man, it's rough, there's limited inventory, rates are higher. And look, I get it. It's probably not the most fun time in history to be buying a home. That being said, your alternative is renting. And realize that your interest rate on rent is 100% because none of that goes to principal reduction. There's no tax benefits, nothing. You're simply just throwing your money down the tube. So I hope you guys found that useful. If you have any questions, comments, thoughts, fears, if you have a good joke, throw it in the comments. Thanks for tuning in. Look forward to seeing you next month.